told us that only the Fed can stop the rally. Joining the company now is Keenan Hauke with Samex Capital.
Morning, Stuart.
Morning, Keenan. Look, here's the question that I want to ask. Is it, and what all of our audience is asking, is it too late? If I jump in now, I'm going to lose my shirt. Should I jump in now? What do you say?
Yeah, the train is about to go by. They jump and they hit nothing but rail, right?
Yeah, that's the well. Is that the story?
It is a great question, and it's not only, Stuart, do we jump in now because we may miss more of what has already been a good rally going back for the last 2 years, but let's face it, most investors, not just domestically but around the world, have bought firmly into the concept and the idea, Stuart, that you have to go with this broadly diversified portfolio approach, right? We all know modern portfolio theory, diversify your ideas and have a little bit of this and a little bit of that. Look back over the past 4, 5, and even 6 months, and perhaps even longer into the late portion of 2009, there are a lot of things that aren't working. We've got fixed income since September of 2010, with the exception of high yield, that's been getting hammered.
Okay, wait a second. Come on, I want a straight answer. Our viewers demand to know, should they jump into the stock market now?
My answer is yes, but with this caveat, you've got to pick which stock market. That's where I was getting. You can't just buy on a diversified basis anymore. We're 2 years into this bull market. It's not going to last forever. There will be an end game to this bull market, just like there is with every bull market in human history.
Okay, we got it. But look, the stocks that have gone up most recently are basically technology stocks. Should you jump into them?
Big cap U.S. stocks, right? S&P 100 type companies, exactly.
You buy them now?
I would, if I had a portfolio with $1 million in it, or 100,000, or you take a dollar base, I'd put 25% to work right now, and then wait for a pullback to start allocating more cash over the next couple of weeks, or perhaps even a few months.
You're very, very
short term, the market is vulnerable to a little bit of a pullback.
So you're not telling me yet, jump in with both feet. You're not telling me that, are you?
No. No, absolutely not. The market has been going pretty hard since early December. We've had some pretty good gains on the short-term basis. It is vulnerable to some selling, and that selling could be caused by any number of reasons. If it's just profit-taking, or it could be inflation, or the unemployment picture that we saw this morning wasn't quite to their liking, it's vulnerable to some kind of a pullback. But, again, I don't think anything severe is in the cards, maybe 2%, 3%, perhaps even 7%. That's the worst it possibly could be, in my opinion at least. And therefore, you put a little bit of work now, you wait for a pullback. But I think for the rest of this bull market, Stuart, you don't want to be broadly diversified. That's the point. Okay. The stock market is still in a bull market. It could last for several months, if not another year to year and a half. But you want to be a little more narrow right now up until the last day, which is technology stocks, as you mentioned, big cap U.S. companies, the S&P 100. That's about it. Okay. Well, we'll take it. Keenan, you answered the question. We appreciate that. Thank you very much. Keenan Hauke. You got it, Stuart. Have a great day. Bye.